Hey guys, WarBucks here with daytradingvoice.com. Today I'm doing a video on support and resistance, the technical levels that us traders watch each day to plan entries and exits on our trades. I'm going to have an overlay on this video that will actually give you the Investopedia definition of what support and resistance is, but I'm also going to give you my layman's term definition of what support and resistance is. Support and resistance are basically levels, high and low levels, based on entries and exits. Your support level is a level that traders feel like they're getting a great deal for a particular stock based by the price action and history. They know that when stocks are sitting on support, they're sitting at a level that usually sees upside from that point. And so you jump in at your support levels, and as you reach resistance is a level where the stock becomes a little pricey in a lot of traders' minds, and so they're taking profits from their previous entries, therefore creating a reversal in price action, and the stock trails back away from the resistance area, and that's where you come up with this historical price action of buyers getting a great deal and buyers cashing in on that great deal and selling away from it before they hit that line in the sand. We're looking at a chart here of Fairchild Semiconductor, and these are all just for example purposes only. I'm just wanting to show you how stocks behave in between these lines and how you can kind of incorporate the support and resistance indicators onto your screens when you're doing your homework in the evenings. And so we're looking at a Fairchild Semiconductor chart, and you can see clearly how the stock behaves in between point A and point B here. You constantly get these historical bounces. This is a 6-month chart, but you can see how these lines are tested over and over again. And the way these lines are annotated is you want to find, when you're looking at a daily chart, 6-month, 1 year, 5 year, whatever it is, you're looking for lines that seem to be stall out points of the price action, whether it's that the stock went on a run and could never make it through the resistance area, or if it's tanking, it never seems to tank below this area. And so you go through and you look for these candle areas where there's multiple candlestick touches either on both sides, because the same line, if you're hitting it from the bottom side, it's resistance, but if you're sitting on it from the top side, it's the support line. And so what I do is I usually will go to at least a 2-year chart, and I will switch over to a 1 week, so that each candle here represents 1 week. You can clearly see how the stock behaves at these certain levels. I don't worry about a small break above the line or break below the line. I'm really looking for the consistency. I'm looking for multiple candlestick touches, and as you can see, it even goes back farther. If I went back even 5 years and hold these lines up, you can see where even over here it's sitting at this same level as it is over here, almost 4 years later. Each one of these levels, if you hold these lines up, you'll see that these lines are clearly generated from several years ago and are still in play today. And so, like I said, what you're looking for is multiple candlestick touches. I like to use the candlestick body. Some people use the wick. Whatever you decide to use, I would just stick with that particular touching pattern. You don't want to have it too mixed up, or you kind of lose a little bit of your accuracy. None of these lines are dead accurate. They're just giving you a general indication that this is an area that you should be aware of. When you're looking at these stocks and you see them bouncing, sometimes you'll even notice yourself and educate yourself by saying, okay, look, I have this line here, but it's come close to hitting this line 5 times. Feel free to move your line up. This is not scientific. You're really doing this for yourself, and you're trying to educate yourself on the best possible entries based on your own history as well as the market's history. So these lines can be moved up and down to adjust them to where you feel like they're the most accurate for you. I'm just going to go through a few different charts here and show you how well some of these other stocks play in between the lines. As you can see here, we still have all these same support areas and resistance areas for years on these things. I want to get back out to a shorter time frame here. Like on Morgan Stanley, you have two different types of support and resistance working here for you. You have your standard horizontal bars, but you also have this channel that's working downward, and you have this lower trend line on a downward channel, signifying that you're setting in lower lows all the time, but it's also still gives you that bounce area that it'll bounce off of and give you at least short-term trades to be trading off of. What I look for on a chart like this is a crossover or an intersection of good old reliable, your horizontals here, where they kind of intersect with some of your other types of support and resistance. So like right here, you have an intersection of a downward trend line, which is in a form of support all by itself, but it's intersecting with my horizontal support line, and right then you get this nice explosion to the upside. Anytime you have any type of intersection, whether it's a moving average or a crossover of a technical pattern crossing over with your horizontal support and resistance lines, it usually will give you either a better support or a stronger resistance. In this case, it broke through here, but I'm assuming that's because of this earnings date here on the calendar. I want to go through just a couple of them here and give you some more ideas, though. Here you have ONNN. You can clearly see you're setting here, bouncing back and forth between support and resistance, and so if you know these levels, you're able to base trades off of these trades. Here you have another example of what I was talking about, where you have a pattern trend line which is acting as support, but it's also intersecting with your 200-day moving average, giving you that nice bounce, giving you some upside. So there's different ways of playing off of support and resistance, whether you're playing it off of a moving average as support or resistance, whether you're playing it off of your traditional horizontal bars that you draw in yourself based off of candlestick price action. And you can clearly see this is, if we go out, we back this out here a little ways, and we'll see where this line's come from. Okay, you can see this line here, where it's come from. It's coming off all these peaks from 2 years ago, and you can see where we're sitting right now. So you can clearly see that these levels never change. And so I'm just showing you this for educational purposes only, but you can clearly see you definitely have a strong line of resistance up here. You have it intersecting with a channel that it's put in up here on its own. Thinkorswim does this here. So you have a pattern upper trend line and my horizontal trend line that I've drawn in myself for support and resistance intersecting. So I imagine a good trade is going to be anywhere between this area and the 1184 area. That'll be a nice, swings or whatever you want to, whatever your trading style is for the next several, weeks, months. Anyway, I hope this video has helped you. There's another way to measure good support and resistance areas, and that is using the Fibonacci retracements. And basically what that is, depending on what direction you trade, you can either start out from a low and work your way to a high, but when you do that, and look how close these lines match up with my own lines, and you're just going to have to take my word for it. I do not do this before drawing out my trend lines on my charts, but you can clearly see that the technical indicator of the Fibonacci retracement is definitely in agreement with me on all of my lines except for this guy right here. It's moved his down just a little bit. So you can see that the reason this works is there's so many other people out there watching these technical levels, and so you need to learn how to measure these levels yourself. And if you learn how to use these technical levels in the support and resistance, you can clearly see here how it's going to help your trading. I hope this video has helped you. I know I went through it kind of fast, but I have a 10-minute limit on my videos. I will be planning many more videos up onto the site. Please feel free to rate them. If you have any questions, feel free to ask. Thanks for your time. This is WarBucks, out.